All right, everybody, welcome back to another video here inside of the A1 EdgeFinder Pro. And today we're going to be going over one of our newest features, the put-call ratio scanner. This is a really cool feature that we just finished putting together. It's been in the EdgeFinder for a couple days, but we've tweaked it a little bit and it is finally ready to show off for you guys. And we are super excited to get to do that today. So just in case you're unfamiliar with what puts and calls are, essentially puts and calls can be described as either bullish or bearish bets on the way that the market is going to trend, stocks are going to trend. We actually have this little about section right here that I can read out for you guys really quickly to get a little bit more detail about exactly what it is we're going to be taking a look at. So the put-call ratio is a measure of investor sentiment in the options market. The measurement is proportional to the total amount of calls and puts purchased in a given time period. For this indicator, we're viewing how many contracts are being purchased each day. Puts are considered bearish outlooks on the market, and calls are considered bullish outlooks on the market. If there are more puts than there are calls, market outlook is considered bearish or risk adverse. If there are more puts, that means that the market outlook is considered bullish. If the number displayed is above 1, sentiment is generally more bearish, and if the number is below 1, then the sentiment is generally more bullish. Mild bullishness or mild bearishness can give you confirmation, while more extreme readings could be considered contrarian. For example, if it is displayed as a 0.8, that's mildly bullish, which is a healthy bullish signal, whereas a 0.6 would be far too bullish and could reach the point of being overbought. We also have this link down here that you can click for more information on the put-call ratios. And we also have this up here, which again explains a little bit more about the put-call ratio, but let's actually look at the scanner itself. So you can see the data that we've been collecting ever since November 1st, and you can see all the way on the present date here on January 12th. You can see every single day the put-call ratio, again, that we've been tracking, and we can see here that currently our score is at a 0.88. That is in our bullish sentiment, which basically means that right now there are more calls on the market than there are puts. Now, like we said down here, we don't want the market to be overbought. So a 0.8 is mildly bullish. We're not too far into the bullish sentiment where price might get a little bit into that extreme zone, that overbought zone, and vice versa. If we were to get too high of a number up here, too many people selling off the market, it could be time for a reversal because it might be getting oversold. So again, this is just one of many brand new indicators that we have in the EdgeFinder. Our put-call ratio is something that we've been working on for a while now. We're super excited to show off. So why don't we just take a look back at the past couple of days and see how the market has been trending. So right now, again, today on January 12th, we have a 0.88 put-call ratio, which again is a pretty mildly bullish reading. Yesterday on the 11th, we had a 1.04, which is a little bit closer to neutral, but slightly hanging off in the bearish sentiment. So from yesterday to today, we can see that more calls were placed on the market, shifting it from a slightly bearish sentiment to a slightly bullish sentiment. And again, this is all being taken from what investors believe the market is going to do. Investors can place puts or calls on the market and whether they believe that the market is going to continue to trend up or down. And based on that reading, we can get a general idea of how the investors feel the market is going to continue to trend. One thing I mentioned is that if there's too many puts or too many calls on the market, you may see a bit of a reversal forming. And you can actually take a look at that right here. So anytime that you see that the market really seems to be heading in one direction, you can kind of notice that it begins to reverse. So these past couple of days here, we had a lot of calls on the market, and then you see that it started to trend up a little bit. It trended up, and then we got to this point here where there were just too many puts on the market, and again, investors began to reverse their sentiment, and now we're back into this bullish range here. So it's something that you would definitely want to check up on every single day to see if investors are a little bit more bullish or a little bit more bearish in their outlook on the market. I hope you guys enjoyed taking a look at our brand new put call ratio indicator here in the EdgeFinder Pro. And again, if you want the EdgeFinder for yourself, you can find links to it down in the description below, and you can get a discount on the product when you use promo code A1YT at checkout.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.